So without further ado, Craig, I think you're up first, aren't you? So over to you.
I am indeed, and thank you, Ronnie. We have written an awful lot on the default tariff cap, both in terms of the expected level of it, how we think it should be treated and addressed going forward, and really what we'll be looking at in this first set of slides is just to try and consolidate some of our thinking and also give our latest view on exactly where the cap will be for summer and some early indications for winter 22-23. It's been very much apparent from energy supply statements, administrator reports, and so on that the interaction of the record high wholesale prices, well, I say the then record high wholesale prices that we saw in November last year, the interaction of that increase, that level of volatility, the way in which suppliers hedge their wholesale market exposure, and ultimately how the default tariff cap is set in line with the Ofgem methodology. All of those factors together have contributed to the supplier exits that we've seen. As I've said, this is something which it's quite clear from supplier administrator reports, if you have the chance to go through those. And the government's been keen to stress the role of supplier hedging with this, but ultimately that ignores the fact that the default tariff cap methodology, it really wasn't designed with these sorts of market conditions in mind, wholesale market conditions in mind. And we'll come on to that. Certainly, the comments from government that the default tariff cap insulates consumers from rising energy costs, it's not wholly accurate. The costs can't be totally avoided, and the cap ultimately just postpones or defers when customers, domestic customers, start to experience those. And this is, going to be apparent when the summer 22 cap comes in, and we really see the pressure that's built up in the wholesale market over the last 4 to 5 months will really start to impact on bills. One important, and it seems like it's been forgotten, element of the cap. It was never intended to be an enduring solution to to some of the issues and challenges within the supply market. It was temporary. It was introduced to address the actions of so-called inefficient suppliers and to encourage switching as a stopgap for the rollout of smart meters. Once the rollout of smart meters was complete, the information that they provided was expected to promote engagement, customer engagement with the energy market and competition, thus effectively removing the need for the cap. That's not been the case with smart meter deployment delayed, and the cap now effectively discouraging switching and engagement with the wholesale market. Finally, although the cap is currently set to be in place until the end of 2023, there's a need to ensure that the consumer protections it forwards doesn't compromise the wider sectoral societal goals of the energy sector, notably the net zero transition, but that's something that we'll come on to later on. Could you move me forward, please, Ronnie?